Have you ever wondered how to invest in penny stocks? A penny stock, as the name suggests, is a common stock that trades for less than $5 a share. They're often issued by small, up-and-coming companies, and they offer a unique opportunity for investors willing to take on a bit of risk. Yes, you heard it right, risk. Because while these low-cost stocks have the potential for significant returns, they also come with a high level of risk. The volatility of penny stocks can lead to substantial losses if not carefully managed. But fear not, we're here to help you navigate these choppy waters. This video will provide a comprehensive guide to investing in penny stocks, covering everything from understanding what they are, how to choose them, determining the amount to invest, and the process of buying and selling. So if you're ready to dive into the exciting world of penny stocks, stick around. Before we start investing, it's important to understand what penny stocks are. Penny stocks are those that trade for less than $5 per share. They're often found outside of the major market exchanges because of their low value. Now, why would anyone be interested in these low-price stocks? Well, the answer lies in their potential for significant returns. However, with high reward comes high risk. Penny stocks are volatile and can be subject to market manipulation. They're not for the faint of heart, but for the bold who are willing to take calculated risks. The key to making these risky investments work in your favor is thorough research. Understanding the company, its operations, and financial health can help you make informed decisions. It's not about gambling on a hunch, but about making educated guesses based on solid research. Knowing the risks and potential rewards, you're now ready for the next step: choosing the right penny stocks. Choosing the right penny stocks is crucial to your success. The first step is to conduct thorough research of the company's fundamentals. Look into the company's profit margins, debt levels, and revenues. A profitable company with low debt and consistent revenues is a good sign. Next, consider the industry in which the company operates. Some sectors are more volatile than others, and this can impact the performance of your penny stocks. For instance, biotech companies can see huge swings based on clinical trial results, while technology firms might be more stable. Another key consideration is the stock's volatility. Penny stocks are known for their price swings, but some are more volatile than others. A stock that swings wildly can offer significant returns, but it also carries a higher risk. To assist with your research, consider using reliable financial news sources and stock screening tools. These resources can provide invaluable insights and help you make informed decisions. Once you've chosen your penny stocks, the next step is to decide how much you're willing to invest. Deciding how much to invest in penny stocks is a critical decision. It's like laying the foundation for a house. You want it to be solid, yet flexible enough to withstand the market's unpredictable winds. Now, when it comes to penny stocks, we're talking about a high-risk, high-reward game. So, the golden rule here is to invest only what you can afford to lose. This is called risk capital. Think of it as your play money, the amount that won't shake your financial stability if things go south. It's not about being pessimistic, but rather being smart and prepared. Now, you might be tempted to put all your eggs in one promising basket, but remember, diversification is key. Spreading your investments across multiple stocks can help mitigate potential losses. Investing is not about overnight success. It's a journey. So, tread carefully, think long-term, and always keep your risk tolerance in check. With your investment amount determined, you're now ready to make your first penny stock purchase. Now that you've done your research and determined your investment amount, you're ready to buy your first penny stock. So, how do you do it? Well, you'll need to set up a brokerage account. This is essentially an investment account you use to buy and sell stocks. Once your account is set up, you can start buying penny stocks. But buying is just half the story. You also need a selling strategy. For instance, you could set a stop-loss order. This automatically sells your stock if the price drops to a certain level, limiting your losses. Alternatively, you could use a take-profit order. This sells your stock once it reaches a certain price, ensuring you lock in your profits. Congratulations! You've taken your first steps into the world of penny stock investing. Remember, always do your research and never invest more than you can afford to lose.